Hello everybody and welcome back to the channel. In today's video we're going to be taking a look at Apple stock and we're going to see if it's a good investment to add to our portfolio. So let's go ahead and let's roll the intro. Now, Apple is one of the biggest companies in the world, if not the biggest. They recently just had a $3 trillion market cap. As you can see, they offer different type of products and they offer different type of services as well. They have Macs, iPhones, iPad, Apple Watch, etc. They also have a lot in TV and entertainment, which is another revenue source. And as you can see in entertainment, they have things like Apple TV and Apple Music, which is used worldwide. Now, currently with everything that's been going on in the market and the news that came out recently of an increase of tariffs to China, this stock has been taking a beating, even though they still weren't performing at its best beforehand. As you can see, year to date, the stock is down 22%, which is about $55. And the concern here is that Apple's main product, which is the iPhone, is going to cost a lot more to make since they do manufacture in China. Their sales are expected to decrease in the future, then that means their stock price will currently decrease how it's doing now. Now, as you can see, Apple's market cap went down to 2.83 trillion, which is still a lot. Their PE ratio is 29.95, and they do pay a dividend of 0.53, which I consider to be very good. Now, I'm going to show you guys the intrinsic value for Apple in a moment, but beforehand, let's take a look at their current PE ratio and how it's trading to its stock price. Now, the last data that we had, they had earnings per share at 6.30. Their PE ratio was 39 and the price of the stock was 250. Keep in mind now that the PE ratio is a lot lower. We don't know the EPS yet, but the price of the stock keeps dropping down as well. We are almost to the values of 2023. So what am I waiting for and why am I showing this? In 2023, for example, the PE ratio was 32, so it was higher than it is now. The price of the stock was 192, so it is higher than it currently is, and the PEs was $5.95. If we take a look at Apple's earnings, we can see that they've been increasing or keeping their earnings steady throughout the years, except in Q3 of 2024, which is still higher than what it was in 2023. So if in Apple's next earning, they show EPS of over $5 and they maintain the 6 EPS earnings with a PE ratio less than 26 or 25 or 28, whatever it is now, and the stock price continues to drop, I might consider buying this company because based on the multiples, it is selling at the same price or at a cheaper price than it was in previous years. Now, if we take a look at analyst ratings, from a buy rating of 5 points that you can get, they have a total of 3.93. That consists of a total of 45 analysts, 21 being strong buys, 7 being buys, 13 holds, 1 sell, and 3 strong sells. Now, this isn't the intrinsic value of Apple. I'm going to show you that now, but they're expecting this stock to be worth an average of $248 and a high of $300. Now, as you can see, Apple has beat their earnings every single time, and they're expected to still beat their earnings with this new news every single time as well, all throughout 2025 and starting Q1 of 2026. And also something we always take a look at here in the channel is going to be the annual EPS estimate and the annual revenue estimate. We expect for this to grow from 2025 to 2026 on both ends of the spectrum. So for example, on the EPS, it goes from 7.30 to 8.17, which is a check mark there. And on the revenue, it goes from 409 billion to 441 billion. So now let's take a look at Apple's income and see how it is that they make their money to understand a little bit why the stock keeps dropping apart from what I just said on the tariffs. Now, if we take a look at this chart by Vision Capitalist, we can see that out of 391 billion, which is an increase in revenue of 2%, the iPhone alone was 51% of its sales. Okay, keep in mind most of the sales is more than half is just based on iPhone, so there is a lot of concerns with this new tariff increase to see if consumers are even going to buy it at a higher price. But as you can see, I want you guys to take a look at this right here of 25% in services. Okay, this is Apple. This is something Apple has continued to grow. It's not obviously anything compared to the iPhone. It's half of the iPhone sales, but it's definitely a very important part of the business and it keeps growing. Now, if we take a look at the region, one good thing Apple has is, I guess you could say, it's diversified. It's not just in the Americas. As you can see, it has a high percentage in Europe, in China, and Japan as well. And to deep dive a little bit more in that revenue, out of the 391 that we just saw, 201 was from the iPhone and 96 billion from the services. And the rest, as you can see here, it's Mac, iPads, and wearables, and home and accessories. And this is the breakdown by revenue. As you can see, it's over 100 billion in Europe. So this is very good, guys. This means the company has a lot of reach, which it can increase in the future. Therefore, if the stock is dropping now, it might be a good opportunity to buy it. However, I do believe that at the current stock price is a little bit high. Now, if we take a look at the intrinsic value of Apple, as you can see, it is currently not a buy in any formula, not on the original original Graham, not on the updated Graham, and not on the revised analyst formula. They're expecting this stock to be worth around $183 to $162. However, we just saw here, based on the analysts, on the Wall Street analysts, that they're expecting this stock to be worth at an average of $248. Obviously, that's different from what we're seeing here. So, I mean, there's different metrics and different ways to invest. It all depends on how you want to invest. I like to invest with a margin of safety. As you can see down here, for me to invest in this company with a margin of safety, I would have to be buying this stock at around $105, which I think this is prices we haven't seen since like 2016 or 2018, something like that. Do I believe Apple is going to go down to $105? No, I do not. I do not, okay? I don't mind paying a little bit more in price, and I don't mind even less knowing that Apple pays a dividend, and their dividend is not terrible. I mean, they've been growing the dividend for 11 years. That's very good. Their growth rate is 5.37%. It's not terrible. Their payout ratio is below even 20%, which is great. And this dividend is just going to increase over time. You always want to get value based on the stock price to make some profits. But I think if the stock drops anywhere between 145 to 165 around there, I might open up a little position because I've never owned Apple. I've been eager to, and I think this is just an opportunity for me. However, I'm not a financial advisor, so please do your own due diligence. If you guys enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you in the next video.